Saugata Bhattacharya is joining us to talk about the inflation number, the WPI number, and the CPI which is due. And there is, Saugata, afternoon. Thank you so much for your time. What's your take on the reading? And also tell us about the general concern on the street is that inflation, is rearing its head once again. And that is the reason central bankers around the world, including ours, may emphasize that it was a pause, not a pivot.
So if I read the numbers correctly, 1.3 odd percent for the WPI inflation print. Incidentally, thank you very much for having me on your show. So 1.3% is certainly higher than what we had initially. We had thought it would be minus 1.3%. If what I'm saying is correct. No, it is minus 1.3. I'm sorry. So it's very close to what we had forecast, minus 1.3%. Obviously, it was even lower, minus 1.7. The very fact that tomato prices plus other vegetable prices, etc., were up, that pushed the number up. So from what we are hearing now is that tomato prices have already started coming down very significantly, 37% down over the last couple of days in Maharashtra. More shipments coming in from Nepal, etc. So well, hopefully the tomato crisis will be relatively short-lived and that should wind its way down. But I mean, inflation does seem to be diffusing to a wider basket of vegetables and other cereals, pulses, etc. So we need to be a little careful on that. On the core side, which is what is the real worry for central bankers, as you mentioned very rightly, both for global central banks, Indian central banks, the RBI, MPC, etc. It is beginning to come down, but it's very slow. 5%. We expect 5% today in the evening for the CPI core inflation. So that remains a bit of a worry. But hopefully, I mean, RBI is not going to cut rates anytime soon. You're absolutely right that this is not a pivot. This is going to be a longish pause. We had initially expected early in FY25, which is the next year. There was a chance of a 25 basis point rate cut, but the latest RBI projection of 5.2% CPI inflation for Q1 FY25 also puts that in jeopardy. I also believe that it's very, very likely that the first rate cuts will only happen in the second half of FY25. But things are changing very fast. Let's see, China's deflation might actually translate into a fall in commodities prices, metals, etc. So that might help. The other main cause for worry is oil. Oil tending to stick between 80 to 90 and closer to the 90 level. That probably will hinder any cut in petrol, diesel prices in India anytime soon. So that's a broad view of inflation context in India and the world.
Saugata, point taken. Just a quick question. As far as your CPI estimate is concerned, you said 5%. Is that not underplaying it? Because the rest of the street has talked about 6.5%. And there are parts of the street that believe it could be uglier than that, closer to 7%.
No. 5% is the core inflation I'm talking about.
Okay. Not the CPI.
Yes, for the CPI. 6.7% is our headline inflation with an upside bias. So you're absolutely right. I mean, it's 6.7% with an upside bias.
Okay, fair enough, Saugata. On that note, we'll let you go. A quick conversation today, but it's earnings season and a lot of earnings also coming through. So just have to pass through all of that.